Wall Street home buyers are freaking out right now. They are dumping properties onto the US housing market and taking massive losses while doing it. I mean, take a look at this listing in Arizona. It was purchased by a Wall Street buyer on June 2nd for $615,000. Now take a look at this. 2 months later, this same property is listed at a $50,000 loss, and you are all going to be able to take advantage of this Wall Street fire sale to get a house at a big discount. Because here's what you all need to understand. Everyone thinks these Wall Street real estate companies are these big bad behemoths who are all powerful and who are going to keep buying into the housing market no matter what. Well, that is wrong, everyone. These Wall Street investors, they are just as confused and speculative as anyone else. And now that the housing market is crashing, something they weren't prepared for, they are freaking out. They are panicking. They are angry. They don't know what to do because their models, their statistical models, weren't set up to handle a housing market where inventory is spiking at record levels and prices are now going down at record levels, especially in certain cities and neighborhoods where these Wall Street investors are most active. These are the markets that are crashing the most right now and that are going to provide actually the biggest buying opportunities for you guys out there. And the number one company who is most at the center of this phenomenon of Wall Street home buying, it's not actually Blackrock. I'm going to talk about them later. It's Opendoor. Opendoor is the largest home flipper in America, and they are taking a beating right now. Their stock price is down over 60% year to date. They just announced their earnings for the second quarter and projected a massive $150 million loss over the next 3 months. And they've basically gone on record saying two things. Number one, that they're going to continue to cut the price on homes that they overpaid for in their inventory so they can get rid of them. But then number two, they also said that they are going to buy fewer homes in the housing market into the future, which is a sign that these real estate investors on Wall Street are running scared. Now that the going is getting tough in the housing market and we actually have some homes for sale and some price cuts, these real estate investors and buyers all of a sudden don't feel so confident in their business model. They don't feel like they can make money, which is crazy because we are only 3 months into this housing crash and we already have a company like Opendoor slowing their home sales. We already have a big Wall Street landlord like Starwood Capital selling off 20% of their portfolio. And this indicates to me that the 2022 and 2023 housing crash could be potentially the biggest of all time because the US housing market has never actually experienced a situation with so many investors all heading for the exits at once. Even if you go back the last housing bubble in 05, 06, we did not have nearly as many investors buying into the market back then. So this is uncharted territory, everyone, this massive exodus of investors that's occurring right now. And in particular, I saw some scary things in my backyard here in North Dallas. Take a look at what's going on with these price cuts from these Wall Street buyers. All right, everyone. So this is what I call a typical Opendoor neighborhood. You can see the houses are all the same. They're cookie cutter. They're very close together. They're all kind of very similar floor plans, recently built. This is the exact type of neighborhood that Opendoor likes to buy in. Well, there's now a problem, everyone, as I'm going to show you. There's a listing in this neighborhood from Opendoor where they've had to cut the price over 5 times on the house I'm about to show you. And you can see, you know, if it's an Opendoor home, they'll typically have a sticker like this on the front door. They've had to cut the price by over $120,000 in the last 3 months, and there's still very little buyer interest. And the big problem here is if you look right next door, there's another house for sale. Literally right next to the Opendoor house, we have another house for sale. So how do you think the owner of this home feels right now that they're right next to a house owned by Opendoor where they're cutting the price every week? And this housing market manipulation by Wall Street buyers is occurring all across America to some degree, but it's specifically concentrated in certain cities in America. You can see on this map from Redfin, it's a lot of the areas in red in the Sun Belt across Georgia and Florida all the way to Arizona that have the biggest share of Wall Street buyers who invaded the housing market over the last 2 years and are now exiting the housing market. And you all need to prepare for what's coming, everyone, because I don't think anyone in the housing market is ready for this. It's that the Wall Street and institutional capital, after going in so fast into all these housing markets and pushing those prices up above what locals can afford, well, now it's getting sucked out of all these markets in rapid succession. The Fed is hiking interest rates, they're doing quantitative tightening, mortgage rates are high, the cost of borrowing for these institutional investors is now skyrocketing. Put simply, the party is over, and that is going to cause not only like a correction in home values, it's going to cause an overcorrection because there's going to be a demand vacuum. There's literally going to be like no buyers in some of these cities and neighborhoods. Now, of course, the Wall Street buyers, they're trying to put a positive spin on this. They're pretending like this is a dip in the road. They're saying this is a temporary situation due to a surge in higher mortgage rates, and whether it be Opendoor or Offerpad or Zillow or Redfin, they're all kind of saying the same things in their earnings reports, that they think as mortgage rates stabilize, we're going to see home buyer demand rush back into the market and everything will be okay at the end of 2022 and going into 2023. But I think we all know that is not the case, everyone. Pending home sales, they're at their lowest level in 11 years. Mortgage purchase applications, they're at their lowest level in 7 years. And it's very important you understand that these massive declines in buyer demand don't only speak to, issues with higher interest rates. It speaks to a secular downturn in the demand for housing. Like pretty much everything else that boomed during the pandemic, whether it was housing or e-commerce or electronics, all of these things are now crashing because people don't want them in the same way they did 2 years ago. And in fact, what I think happened in the US housing market is that we pulled forward housing demand. People who would have purchased in 2022 or 2023, they ended up buying in 2020 because the pandemic accelerated the buying decision, especially for a lot of millennials. But now we are in that demand vacuum I referred to earlier, where data from CoreLogic is showing that regular home buyer purchases now for a year have been back down below pre-pandemic levels. And for a while, it was the increase in investor buying that supported the market. But now that's going away as well, which is going to mean continued pandemonium into the housing market. Here's what's funny, everyone, and this shows you how crazy the stock market rally is right now. Opendoor, the biggest home flipper in America, who announced a brutal earnings report yesterday, their stock price is up by 20% since that earnings report. These stock traders, they're ignoring the awful fundamental data coming out of Opendoor, and they are focusing instead on the fact that Opendoor announced a partnership with Zillow, where people will now be able to request offers from their home from Opendoor on the Zillow website. A deal which does nothing to address Opendoor's biggest problem right now, which is an inability to sell the homes they already own. So I just thought that was an interesting anecdote, everyone. In case you were somehow thinking that this Wall Street stock market rally was legitimate, just take a look at what's happening with Opendoor. It's proof that the people buying into these companies don't know what they're doing. They are simply speculating, looking for any bit of positive news to justify their addiction into buying and selling stocks. But now, back to the housing market, everyone. I know you guys want to know, what are the cities, what are the neighborhoods where Wall Street companies like Opendoor are most active? Where are you going to be able to pick up deals as these Wall Street companies exit the housing market? Well, good place to start to answer that question is to go to Redfin to look at data on the metros with the highest share of investor activity. And we can see the top 10, well, it would be Atlanta, 33% of homes purchased by an investor, Jacksonville, Charlotte, Phoenix, Miami, Vegas, Orlando, Tampa, Nashville, Columbus, Ohio. These are the markets where the investors are most active, and it's not just the home flipper investors like Opendoor, it's also Wall Street landlords, companies that buy homes to not just flip them for a profit, but to rent them out. And even these Wall Street landlords are getting scared. Starwood Capital, as I mentioned earlier, they just sold off a big portion of their investment portfolio in single family homes. And the real hammer here is going to drop, what I'm calling phase 2 of the investor exodus. It's going to occur when the rental market in America heads into a crash, which I predict is going to happen by the end of 2022. We're going to see a mass wave of evictions. We, of course, had the eviction moratorium during the pandemic. Nearly 3 million eviction filings were prevented. Well, we're seeing very fast now, those eviction totals are skyrocketing in cities like Fort Worth, Jacksonville, Tampa. We're seeing those eviction numbers skyrocket. And so as the recession gets worse and more people get laid off and lose their jobs, we're going to see more people not able to pay their rent. And that's going to be when the Wall Street landlords really freak out, because they're already having to deal with declining values of their assets. They're already having to deal with their cost of capital and their interest expense getting more expensive every time the Fed hikes rates. Well, now they're going to have to deal with delinquency and non-payment of rent. And it's going to be something that's going to be similar to 2008 in terms of impact. Maybe it's not going to be a massive wave of homeowners getting kicked out of their homes due to foreclosures. We're going to see some of that, but this is more going to be a wave of many of the 20 million investors who own homes in in America selling off, selling out, because there's no incentive to own real estate investment property right now in America. It's a money-losing venture. And it has been over the last 4 months, everyone. Ever since mortgage rates surged above the cap rate for real estate investment properties, which you can see is the blue line. The cap rate is the income percentage that real estate landlords get. Now that the mortgage rate's above that, and now that these landlords are having to pay a high share of interest on their credit facilities, it just doesn't make sense. It's a money-losing venture, which is why the housing crash is just beginning, everyone. And what I want you as a home buyer and a would-be home buyer to take away from this video is that you will have the opportunity to profit off the mistakes that these Wall Street companies have made. And you could see that developing in real time right now. However, we are not at the point yet where it's time to do that. There is more pain, significantly more pain coming. But in the interim, you should start thinking about where you want to buy, the neighborhoods you want to be in, how much of a discount you're going to want in order to entice you to buy into the market. Start thinking about that now so you are prepared over the next 6, 12, and 18 months to strike when the iron is hot. So one last thing, everyone. What about Blackrock? How much real estate is Blackrock buying? How much of the U.S. housing market have they gobbled up? Well, I dug into the data to figure this out, and the results really surprised me, everyone. You're not going to believe this. So first things first, I went to Blackrock's SEC filings, their 10K annual report for 2021, and I looked up what is their total real estate assets under management, and it's 28 billion, or was 28 billion at the end of 2021, which was up slightly from 2020. Now, that 28 billion includes all of BlackRock's portfolio that they directly or indirectly manage and own across the world, not just America, but making the assumption that that 28 billion is just US single family homes, that would be about 0.5% of the total value of the US housing market. So interestingly, BlackRock is not a big player in terms of owning, managing, and buying real estate in the US. They're more of a symbol for institutional real estate investment. Blackstone, a private equity fund, they do buy up a lot of homes and apartments. Progress Residential is a big Wall Street landlord. We talked about Opendoor and Offerpad, the home flippers, in today's video. Those are really the names you need to know in terms of corporate investment in real estate in America. Those are the companies that cause prices to go way up and get really unaffordable. Those are also the companies that are pulling out of the market right now and are going to cause prices to crash even more.